It's crazy. And I think that part of the issue there too is, unsurprisingly, it's almost easier to bat that problem away, right? To just say to yourself, well, that won't be me, or that's a scary thought. I don't want to deal with it. But as you point out, and as Jen pointed out, 70%, that odds are that's a problem you're going to face.
Hey, John Stevenson here, the Guaranteed Retirement Guy, and I have on my show today a special guest, Chris Simmons. Chris has been working with Annuity.org for quite some time. He actually writes for them. He is a certified educator in personal finance, and he's authored numerous important projects. And I'm super excited to have him on here. He specializes, of course, in annuities, in retirement income planning, IRAs, Medicare. And Chris, thanks for joining. Appreciate it.
Definitely. Thank you for having me on.
So I had a few questions for Chris, and I talk a lot about income planning and annuities because a lot of times people will reach out to me and they're like, well, I want as much income as I can. And usually we'll do an income plan to kind of bridge the gap. We'll look at their pension and we'll look at their Social Security, and then we'll figure out, all right, well, how much do you want? Do you look at things like that, Chris, as far as you look at inflation and then you try to figure out the gap as far as like what an annuity could do to bridge that gap?
Yeah, absolutely. I mean, one of the main things that when we're writing about these products is, well, one, there's the simple fact of kind of the misunderstanding of, I think some people think of annuities as investments when in reality they're financial products and insurance products, and the concept being that they can help protect you from some of those risks later in retirement. And so we kind of look at it through that angle. And one of the main things that we've always written about is that, annuities, there are many different flavors of them, many different types. Not all are right for everybody. And it's really about, it's not like buying something on Amazon, it's about finding your right plan and what your plan is for retirement and what annuity and what type of product can help you protect the risks you're up against.
So let me ask you, one of the questions that I was curious about is, what do you think someone needs in 2024 to retire comfortably?
What a good question. And the truth is, it's probably a different answer for every single person in America, right? I think that's one of the trickiest parts, is that a lot of folks who come through our site and come through a lot of websites, they're looking for a number and they're looking for a clear answer. What do I need to retire? What number do I need to be reaching towards? And the truth is, it's different for everyone because people have different ideas of what retirement they want. I mean, you might be looking at your retirement and thinking, this is my chance to see the world. I want to travel to Europe and South America and do all these great things, and these are my go years, and that's going to require some money. And for someone else, retirement might be, I want to be closer to my family. These are my quiet years. I want to relax and unwind. So determining your own goals and your own plan for what retirement looks like for you is where you really want to start. And truth be told, another thing that hurts people is there are a lot of sort of rules of thumb and things online that maybe don't always apply the way people think they do. People are always looking for a quick fix of, I save X amount or I get this percent. There's really nothing better you can do than speaking with a financial advisor. Finance is a tricky area. It's complicated, and just having a professional set of eyes on it is one of the easiest things you can do to really get a clear number and get a clear plan and start working towards what your retirement looks like.
So I read an article just recently on Wall Street, and they were saying the magic number for retirees was 1.46 million.
It's the magic number for some retiree somewhere, I'm sure. But
for sure. I mean, I had some people who were like, that's totally not enough. And then I worked with some people who were like, well, that's great. I mean, that's actually more than I need, right? Yeah, you're right. I think it depends on your lifestyle. It depends on your needs. If you're going to travel, I mean, some of us might want to go to Europe. Others might just be happy to go fishing and hang out in the woods at a cabin, right?
Yep. 100%. That's kind of where it gets tricky too, because I think I'm a cabin guy. That sounds wonderful, but
me too. Someone
else might be more of a spending the summer in Rome type of guy. So it's just figuring out where you land.
Well, and that's the thing is, like, I love going to the woods. I love the cabin. But at the same time, I have gone to Europe. I would love to take my family there, but I've got 5 kids, and that's just hard just to cart all your, obviously you got to wait till retirement if you're going to do that. But if you do go to Europe and it's just the two of you, I mean, with plane tickets and with the accommodations, I mean, you're spending probably $5,000 to $10,000 for a trip.
Easily. And that can be even more on the low end of the trip you're looking for too, if you're really looking to just get into Europe and say you're there, or if you're looking to really live it up while you're over there.
That's right. So then what if someone has not been doing the things that they need to be doing, and they've kind of got on a late start, they're worried? What would you recommend that they do to catch up?
Yeah, it's interesting. And I think a lot of that comes down to when someone is behind, how behind you are, right? Because there are different kinds of situations you can be in. If you're in a situation where, I don't know, you didn't open a 401k or any kind of savings plan until your 30s or late 30s, is a different situation than if you're 55 right now and thinking, I should probably start wondering about what I'm going to do once I retire. So yeah. Your options are different depending on where you're at. But one easy option available to everyone that can make up a lot of ground is just simply catch-up contributions in your 401k or your IRA. I think the number for 2024 for 401ks is $23,000 is the limit, but if you're over 50, you can contribute another $7,500. IRAs, it's not quite that high. I believe IRA is just another $1,000 over the limit if you're 50 or over. But if you're finding yourself, and honestly, that can help people too, because a lot of people aren't hitting their peak earning years until their 50s anyway, and it gives you an opportunity to really catch up and make up that ground. Yeah. Now, if you're in a more serious situation or something like you're close to retirement now, or you really just haven't saved the way you've wanted to, there are more drastic options out there. There are options such as delaying retirement. It seems like for a lot of Americans, 65 is still kind of seen as that's the year I'm going to leave the workforce. But full retirement age for pretty much everyone here on in is 67, and that's when you can get your full Social Security benefit. And waiting to take Social Security can make a dramatic difference. That seems like one thing that people often don't realize, that, well, I'll just take it when I retire, and you don't necessarily realize how much money you're potentially leaving on the table. And another more drastic option is considering working in retirement, whether that's a part-time job or moving into a different field. And that's something that sounds scary to people, thinking, well, this is my retirement, I shouldn't be working anymore in any capacity. But truth be told, bringing in some kind of income in retirement is becoming more and more common and more key. And it was interesting. I actually, a couple of years ago, I wrote this in-depth feature about some of the mental health issues retirees are facing. And it was interesting to find that retirees who stay in the workforce or have some kind of structure are actually a lot happier than retirees who just completely leave. I mean, you don't realize how the first 60, 65 years of your life, you have everyday structure. And when that structure is suddenly gone, it may not be the sunshine and rainbows you were expecting, to have nothing on the calendar for the next 15, 20 years of your life. Unless,
of course, your calendar is full of fishing or...
Well, there you go.
For me, it'd be
absolutely
hiking, backpacking, skiing. I mean, I have some people, you're right, they'll leave, they'll retire, they'll do a few trips, and they're like, wow, I am bored. And so they'll go back kind of semi into the workforce, just to kind of have like that structure that you're talking about, but still be able to stay out of it enough where they have the freedom, right? The retirement freedom they want.
Absolutely. It's about towing that line.
So, all right. So people start late. Obviously, they got the catch-up contributions, which is good. And I do have a lot of clients that are doing that. And you're right. As they earn more in their 40s and 50s, they're able to catch up. They're able to really start funneling that money in so that compounding can work for them. And then, of course, with Social Security, as you know, if they delay just 3 years from 67 to 70, they're getting another 24% in benefits. So I have a lot of people doing that, and for good reason, especially if you're married and you're worried about your spouse and you're like, all right, my spouse needs to have, maybe my pension is going to get cut in half, or maybe it goes away and my spouse needs extra money. One way to mitigate that is, of course, to delay taking Social Security benefits till you're 70 so that your spouse has a higher benefit, because obviously they're going to lose their benefit, but they'll get the higher of the two when you pass away.
Absolutely. I mean, the power of that money is incredible. And it's always been interesting to me how many people seem, and I guess it's just if you don't know better or don't know how much that difference can be of, well, I'm retiring at this age, I'll take Social Security when I retire, but you're leaving so much money on the table if you go that route.
So speaking of Social Security, I often call Social Security an annuity, and pensions are annuities. How would maybe a second or a third annuity help someone in their retirement planning?
I like that phrasing. I haven't heard that before, and that's an awesome way to look at it, because we've talked a lot about that. An annuity is kind of like buying a pension, right? And, there are so many different types of annuities out there, so it's hard to cover all of them, but it's really, it can depend on what you're looking for, but it's combating some of the risks of retirement. I mean, longevity risk is a huge, huge issue for so many people, and the idea of buying an annuity and having the option of a guaranteed stream of payments that will outlast your principal and will last the rest of your life is so critical and so key of really just that built-in comfort of knowing you don't run the risk of getting to a certain age and your retirement savings are gone and there's nothing you can do.
So we put money into an annuity. We've got guaranteed income. So maybe a fixed index annuity with an income rider, perhaps.
There you
go. What about, so if I was to have an annuity, would you recommend I have an annuity with maybe an inflation rider, or maybe strategically purchase several annuities and activate income streams at maybe, an immediate income now, and then maybe wait 5 years, to activate the income on the second annuity and so on? What do you think about that compared to maybe using an annuity with an inflation rider?
Yeah, it's interesting. And what may come across as a bit of a lame answer is it really comes down to your personal circumstances and what you're looking for, because everyone's financial situation is a little bit different and both options can work for different people. I do think inflation is something that obviously I think everyone knows what a problem it's become in recent years, and it is something that retirees have to consider. I mean, retirement isn't a 5-year decision, it's a 20-year decision, and you have to look at your plan and figure out how you're going to combat that moving forward, because that is a risk, especially depending on the type of annuity purchase. If you're going for flat payments or something along those lines, is that money is going to lose value over the years.
Yeah, and I have people that look at those, but they're not happy with the payments starting much, much lower in the beginning. They'd rather have more money in the beginning. So that's another factor in people's decision. I have someone who might need $50,000 a year from an annuity, but if they do an increasing annuity, they might have to start at like $32,000 a year, which of course doesn't feel very good, especially if you want to retire now and enjoy it now. But yeah, you've got probably some of the most, I would say, guaranteed strategies that I've used for inflation would be a SPIA annuity, a SPIA or a DIA, a single premium immediate annuity, where basically you can choose 1 to 5% on the guaranteed annual increase. The problem is you started as just a much lower amount than you normally would, and it's an irrevocable decision versus putting something into a fixed index annuity with some type of increasing option. But of course, some of those will only increase with the index and are only hypothetical. And so that's something to consider as well. I do like the stacking. I do like being able to purchase, or what we would call laddering. I do like the idea, if people do have the assets, of purchasing several annuities and purchasing them all at the same time, so that you can have income right now, and then you can activate an income stream from a second annuity in a few years, and then wait a few more years to activate income on the third annuity, and you're typically beating inflation and you're exceeding it.
Yeah, absolutely. And that's spot on. I mean, laddering can be so incredibly effective for exactly all the reasons you said. And it's a good point too that people look at of, it can be a little uncomfortable when you're talking about something like an inflation rider, where you do see those initial payments of, well, these are my go-go years. This is early retirement, or I want that money, before long. But no, absolutely. Laddering can be incredibly effective to just keep stacking those payments as time goes on.
So what would you say as far as, when people retire, I know everyone's got their budget and they kind of know where their expenses are going to be. Where do you think the biggest expenses that they should be aware of, that they should be planning on?
Yeah, it's interesting. Retirement is full of expenses, unfortunately, like all other aspects of life. But just to give you two of the big ones to focus on, one is very unsurprisingly going to be medical expenses. It's funny how you can kind of know that. I don't think anyone's going into retirement and is surprised to learn that medical expenses are going to be part of the game there. But there was a Fidelity study from a few months ago that said that the average couple retiring now at 65 would need something like well over $300,000 saved specifically for medical expenses, and that's with insurance and everything else. So it's just a huge expense in retirement, and I think part of what makes it so difficult for people to manage is the uncertainty aspect, right? You can retire at 65 and it can be 15, 20 years before you run into any serious health complications. Maybe you never do run into any, and you live a great retirement. You could be someone who you retire at 65 and 3 years later you've developed a chronic condition and it's eating away at your savings. And it can be really tough to manage because of how much uncertainty is built into it. And the second one, well, go ahead. Sorry.
No, I'm just, to piggyback on that, I talked with your partner, Jen Shell, and we were talking about long-term care. And 70% of retirees at one point in their lives will be using long-term care. They will need long-term care at some point. And that's really sobering because none of us want to be in that situation. And you're just talking about regular medical costs and and your long-term care. Private rooms right now are $10,000 a month.
Yeah. It's crazy. And I think that part of the issue there too is, unsurprisingly, it's almost easier to bat that problem away, right? To just say to yourself, well, that won't be me, or that's a scary thought. I don't want to deal with it. But as you point out, and as Jen pointed out, 70%, that odds are that's a problem you're going to face.
Yeah. So then do you have any suggestions for people who are 65 and they're thinking, all right, well, I've got Medicare that's going to give me these benefits. What do you have any ideas as far as the options they should be choosing for Medicare, as far as planning for their medical costs?
Yeah, sure. I mean, the thing about Medicare is it's a term that everybody knows, and one of the less fun parts of getting near retirement is then having to learn all the different iterations of it and which makes the most sense for you, because Medicare can be kind of a complex thing. But when you are getting into retirement, you're going to have a few different Medicare options available to you. So the term Medicare, well, let's talk about original Medicare first, right? That's when you hear the term Medicare is often what it's referring to. That's the Medicare that is provided through the federal government. That's what you're eligible for when you're 65, and if you're a U.S. citizen, a couple other requirements that are pretty much everyone hits. And Medicare, original Medicare, is divided into two parts, Part A and Part B. That already starts sounding complex, but really it's just Part A is your hospital insurance, Part B is doctor's visits, medical equipment, things like that. So one option is you can just stick with original Medicare, but there are certain things it doesn't cover. There can be a lot of out-of-pocket costs left over, which is why there are other options people look at. One of those is Medicare Advantage, which is basically another version of Medicare, except this one's provided through private insurers. And the good news is that it legally has to cover everything covered by original Medicare, so you don't have fewer benefits. It'll actually often have more. One of the big perks of those plans is things like vision and dental, and sometimes drug coverage are included. The downside is you are working with a private insurer and some of the hassle that can come with that occasionally, and you have to stay within a network, whereas with original Medicare, you can go wherever you want. Another option, aside from Medicare Advantage, that people consider is Medigap, which, exactly as the name implies, kind of is an extra insurance option that helps fill some of the gaps to be paired with original Medicare, help cover some of those out-of-pocket costs, provide some other forms of coverage. So those are kind of your choices that you'll have to determine what makes the most sense for you once you're looking at your healthcare options.
I would say Medigap is probably similar to even like an annuity, because an annuity bridges the gap from the income that we've got right now versus the income we need. And with a Medigap policy, of course, that bridges the gap for that. And it's important to think about, as you said, I mean, $300,000 is a lot of money to set aside just for medical expenses. And then, of course, we got long-term care. It's sobering, but it's something that I think that needs to be talked about, because a lot of us, we think long-term care is never going to be something that we're going to need. And then some of us think, well, I'm so unhealthy, I'm not going to live long enough to even need long-term care. I'm just going to live until I die. And that may be true, but at the same time, you might be saddling your loved ones with a whole lot of expenses, debt, and other problems due to not planning for it. And it's just, it's something that people don't want to think about, but as we get older, we are forced to, because we know that it is a very real possibility that we're going to need some of those services. Hopefully not as much as some people use them, but sometimes we do. And so I think it's good to be planning for that.
Yeah, absolutely.
So let's just go back to income planning real quick. When I've chatted with people, and I've got a lot of people who call me about annuities, and they're always wondering what the best one is. And they're always, and usually they're talking to an advisor that is recommending an annuity with a company, and a very good company, A-rated, they're getting decent income from it. But a lot of times that agent is recommending an annuity that gives them a much lower payout versus another company that is A-rated as well, and it's providing a lot more income. But I see sometimes agents will recommend these annuities because they're getting paid a lot more commission versus versus selling the annuity that would benefit that client most. Um, do you see that a lot? I mean, I'm seeing it a lot from my end. Have you noticed? Do you have any comments on that?
Yeah, I mean, it obviously depends, and one of the really most important things you can do when you're interested in annuity, even before talking with an agent or a financial advisor, is to do your own research and to understand what's out there. Because, yeah, you want the product that's best for you, and it's interesting because a lot of folks, because I've been talking with a lot of agents that we work with lately about sort of the buying experience for customers and what it's like for them and what maybe preconceived notions they come in with or what they're looking for. And a lot of folks get very interested in a company, right? They say, that's a name I know, that's a brand I know, so I want a product from them. Just because it's a brand you know or a name you know does not mean they have the best product for you. It does not mean it's the best option out there. And
Right.
working with a reputable agent is huge because they really can sift through those options for you and help you land on something that maybe you're not going to find just through a Google search on your own, but that can be a really, really powerful product for your situation.
And I would say not only working with a reputable agent, but someone who is actually willing to show you everything that's available and letting you choose instead of trying to steer you into something that's going to benefit them more.
Absolutely.
All right. Well, I really appreciate this time. Chris, thank you so much for your insight. I think it's going to benefit a lot of my viewers. I think a lot of people that follow you also will benefit from your expertise, your advice. And I think it's just important to have these talks and to bring awareness to the importance of planning for the income needs that we have, for the healthcare costs that we know that it's gonna happen to all of us. And so I appreciate you. I appreciate your time. Anything you want to add before we get off the air?
Nothing really. It was a great conversation. Again, you can find some of my work on annuity.org, and just thank you again for having me on. I appreciate it.
All right. Well, thank you, Chris. Appreciate your time, and thanks everyone for tuning in to the Guaranteed Retirement Guys show. And look forward to seeing you guys next time. Hey, thanks for watching my video today. So if you've got a question for me, please comment below, because you know what, annuities can be hard to understand sometimes. So I'm happy to help, happy to answer your questions, and the community loves to hear from you. Talk to you soon.